Hey, good afternoon, everyone. This is Trader Tim from over at eminimind.com doing a Monday market analysis video for August 17th, 2020. Pretty tight sideways range day today. And if we start with the E-mini S&P, just starting off the morning by marking the high of the first 30 minutes and the low. I'll put out a 30-minute chart just so we can see it a little bit cleaner. So marking the high and the low of the first 30 minutes is really helpful to get a sense of the sort of opening range. And it can tell us a lot because if we're stuck within that first 30-minute range, well, there's a good chance that, we're not going, by definition, we're not really going anywhere. Versus, a trend day where we might establish a first 30-minute bar and then take off from there. While I'm waiting for my chart to load, let's take a look at the S&P creeping above the highs again today. Just about actually. Didn't Let's see. We did a 87.89. We got about 10 minutes left in the day, and we're at an 87.59. So a couple cents away, a few cents away. There were a few hiccups this morning with Thinkorswim that I know people experienced, um, but by and large, not a whole lot going on today. You can see on the 30-minute chart the opposing tails that are a sign of indecision. Yes, it was a slight gap up, um, but if you establish that first 30-minute range is high and low, and you watch for us what happens when we break above or below it, well, every time today, we just traded right back into it. So about quarter after the bell, there was a little retracement short. And then from there, there wasn't really anything in the middle of the range retracement wise. So if we look at retracement short, nothing there. There was no resistance at that 50%. Retracement long, no support at that 50%, and just same thing throughout the whole day. No stopping in the middle of the range. We just kind of traded to the top of the range and then fell to the bottom of the range, traded to the top of the range and then fell to the bottom of the range. We're currently just about market close, and we traded up to the top of the range, and now we're kind of right back where we opened. And so from the bigger picture perspective, yes, we've come pretty far off of lows in the last couple of months. And while sure we may be overextended, and I do have some insurance on in the form of puts, uh, we are very much from a technical perspective, creating a pretty big spring or almost like we're pushing down in the diving board and we're ready to explode upwards. Like we've built this upward momentum. We have a nice sideways consolidation, and we're just at that point where if we can break above highs from it would be the 12th, then we should have no problem, taking out the all-time highs here in the SPX at 93.52. If we look at some of the other markets, like the Nasdaq has really uh, been leading the way, but we have had some individual stocks, the tech sector, kind of cycle out. You can see, its highs are, well above the highs from July, whereas if we look at the SPY, those same June and then July highs, um, excuse me, the S&P has gone well above its highs from June and July. Let me backtrack then. The Nasdaq also above its highs from June and July. If we go to the Dow, now look at where its high is from June. Okay, we just creeped above that and then July, but not by nearly as much. And the Dow is certainly more sideways and a little bit lagging its trajectory towards the negative 23. So if we look at the same time frame with the SPY, much more relative strength coming out of the SPY. We're already at the negative 23% target. We're a little bit further beyond the highs from June and July. And then the last one of the four, the Russell, not quite at its negative 23% target yet. So there is some upward momentum already in play. When I see this sideways trajectory, I'm thinking, okay, consolidation, that can be a good thing and a continuation of the trend. If you wanted to draw a box around the consolidation, then I would just wait for a break below lows and most notably a close below the consolidation to signal kind of weakening or failing of the upward momentum. But if we do dip below, I'd be watching for an intraday V reversal that would push us back up into the range. We had one bearish day in the S&P last week, and we were followed by, a basically taking it all back. And so when I see that happen, where we had a bearish engulfing pattern, perfect opportunity for sellers to come in and short the crap out of this thing, and nothing. Market just back up, bought, and is right back up at highs. So um, intraday wise, watch for days that aren't in such a tight, narrow range to be uh, taking day trades. Sometimes when you get in these tight, narrow ranges, or most of the times, there's not a lot of activity and there's not a lot of playable activity because the range is so tight. So I'd rather see, days. Um, Wednesday and Thursday were decent last week as far as some trending throughout the day, and we kind of left that first 30-minute range fairly quickly. So like Wednesday, in particular, excuse me, we have the first 30-minute range, and we left that range right away, and it ended up being a pretty good day with a handful of good trades in there. Whereas today, first 30-minute range, and then we've stayed within that high and low. So if you have questions or if you want to follow along in real time, tomorrow morning, Tuesday, every Tuesday, I do a live trading session. You can check that out over at eminimind.com/VIP. Thanks, and we'll talk to you soon.